Okay, today is Tuesday, April 29, 2014. Let's take a look at some of the stock and also some of the ETF for the index. Rather than looking at the index itself, I'm gonna take a look at the ETF such as the SPDR, the IWM, and the Q. Because we all know essentially we're basically looking for the Dow to hit this all-time high up at the 16,576.66. And the S&P 500, if we're going to get up there, it will be this, 1890.90. Okay, so looking at the spider seems to be, bumping up against this resistance up here, near this, what is this, close somewhere around the 187.89. Okay, today the high is 188.03. So it's kind of been bumping up against here. And if we're going to come up and tag this new all-time closing high, that would be 188.88. Okay, so essentially it's this level up here. Oops. Let me get the line draw to back up. So essentially it's somewhere around here. Okay. And if it can get above this resistance, most likely we probably see it to retrace back and possibly come back and test this level down here, which is equivalent to the S&P 500 somewhere around 1848, 1850, and we're essentially looking at it somewhere around this 184.69, 184.66, so somewhere around there. Okay, 184.70 and change, probably, so then if we break that, we probably then be looking at coming down, maybe possibly come down and test these pivot low, and which is also sort of coincide with this trend line here, this rising trend line that we have since July 2013. Okay, and then looking at the IWM, the Russell 2000, we're still waiting, for it to come back up here, and it doesn't look like it's going to do that anytime soon. Although we had a low reversal day yesterday, and then today printed a little bit of an inside inside candle, show a little bit of an update, follow from yesterday's little bit bounce, and if it's cannot get above this particular pivot, which is somewhere around 114.62, there's a good likelihood we'll probably see it to come down and test this level down here. These particular level here, and also if you note that a lot of people have been talking about the Q on the head and shoulder, but also we be aware that there's a possible head and shoulder on the Russell as well, and this might not be the ideal or the neckline that might actually break through, but it could be either one or the other, this one or the one down here. All right, so maybe just come down. So just kind of be aware of that. It's this 107, okay, and this 108.50. So those are the level to keep an eye on for possible resistance or support. Okay, and then also on the Q, because this is the head and shoulder pattern everybody seems to be talking about, and here's the neckline for this head and shoulder. So if it break this level, then probably see it come down and fill this gap at least. Right? And the major move for the head and shoulder, I use my Fibonacci retracement tool, and here's that 200% retracement. So it basically is this distance, kind of get duplicated down here. So essentially, we're looking at somewhere around here. Right? Let me change this to line. Okay. Okay, so essentially it's this particular level here. So, and the low of this candle is somewhere around 77, close to it, 76.98. The closing, oops, that's the close. The low is 76.35. Okay, so those are the ETF for the indexes. I didn't look at the diamond. We could look at the diamond. Here's the diamond, and here's the high, 165.47. That's the closing high. Okay, it seems like trying to get there. It got close today on the cash index. I think we were somewhere around less than 27 or 26 point away at one time, but wasn't able to move it up there to actually tag it. And if we did close for the new closing high, new all-time closing high today, then that would be a what I call, at least from what I see, a change in the direction of the market as I see it. But it didn't happen, so we just keep on waiting. Okay. So we'll see if it's going to come down and tag this 160 again, or it's going to come up and make that new high. Who knows? Maybe tomorrow we'll bounce up there and tag it. We'll see when that time comes, and then we assess it on the price action when it occurs. So right now we just kind of see would it be able to hold this level. If not, if it's going to retrace, then the level that we've been looking at is somewhere around down here at 160. Okay, so the big earning guy that came out, everybody been waiting for is Twitter. So let's take a look at Twitter. This is the after-hour price right now. It's 37.88. That's the price as I'm recording this video. And the thing is, you could see, from a couple of days ago, we were talking about that I wasn't able to get it back up to this 47, and then when it, kind of broke down, and we're saying that it's sort of destined to come and test this, tag this post IPO low somewhere down at that 39, and lo and behold, we saw that today after the earning come out. So right now, we have to see what the price action or the follow-through price action going to be tomorrow to assess, is this the near-term low, and we might see a little bit of a constructive bounce from here, or is this a breakdown of some sort that we still need to wait for some sort of capitulation. Okay, because I think there's still a lot of people holding on in hope of this thing will come back up, and so we still haven't seen that capitulation yet. And if tomorrow we see a gap down, sell off and maybe possibly get down to this 34, somewhere to one of these, extension, these Fibonacci extension, which I have, based on this particular swing here, you can see this little typical H pattern, and you see this, actually bounce back up to this 618, and then broke down below this, level here, this baseline, and we could see it come down to maybe possibly to this 127 extension somewhere around 34 or 32, and lo and behold, if it comes back down to this 161, which is somewhere around 27, and I believe the IPO price was priced at 26. So a lot of people is also thinking about that Twitter might be actually to come back down and tag that 26 level. Well, maybe it will, but we'll see. If tomorrow we put in a hammer, let's say for example, if tomorrow we get a little bit of a, maybe a candle, something like this, right? Well, let me see. Let me do this because we got a little gap here. So we'll probably see a little bit of a gap down here, right? So maybe something something like this. If we see something like this, then maybe we get a little bit of a capitulation down here that all those people just gave up instead of waiting for it to come back up. They just gave up. They said, well, I've been waiting too long and it doesn't look like it's going to come back up, and they dumped it, right? Then that's where the smart money come and pick it up. When we're talking about these wholesale retail type of process, right? So maybe we see something like that, then it might be a little bit constructive, right? But if we don't see that, and if we just simply see a maybe a candle, just come down, maybe something like this, then we're in trouble, right? I think Twitter, well, we're not in trouble. Twitter is in trouble. Or if you're trading the stock, then if you're long the stock, you might be in trouble. But the thing is, we probably will see lower prices if that's the case. Okay, not saying it will. It's just that the probability is there to favor that we might see a little bit more lower prices. So again, so those are a possible scenario. And if it capitulate and get back above this level above the 39, somewhere around there, then maybe we find a floor here and kind of build a base and slowly work itself back up. But certainly right now, the stock, wouldn't be going long on it until it set up some sort of a base and present some, high probability setup to go long. Going short, I think it might be a little bit tricky right now to go short, unless you are basically doing some quick trade or some day trade. So, anyway, so let's take a look at Facebook. And Facebook also got a nice bounce today after yesterday, a little bit of reversal. Remember we were talking about that when it came down here, got a little space between this gap here that was expecting it need to come down and fill up this gap. Well, yesterday it did. Came down and then filled that gap and then bounced right back. And then today we got a little bit of an inside candle here. So we'll see can it continuous momentum and maybe come back up and take out this 64 level, somewhere around the 64. If it could get back above that 64, then maybe it could work itself back up. But right now it seems like the momentum is favoring on the downside here. So we might be see this thing come back and tag these low once more, somewhere around this 54, 52 level. So then looking at Netflix, right? Netflix once again, Netflix came down. It's broke through this gap here. We were saying that it's gonna suspect that it will fill this gap, which it did. It came down and then came down, attacked this, right? This level here, this gap level here. Sort of bounced a little bit and then it broke down again. And then yesterday we got a little doji hammer, and then today it's got a little follow through. So essentially, we were talking about coming down, breaking down this 300 level. Right, so which it did yesterday, it came down and then come back up. So right now, there's a possibility that it could come back up and test, tag this particular level, for resistance before, and let's see what happens. Will it be able to reclaim that and move to it, or come down and then we tag this 300 level and possibly come down and test this 290 area, which is also this 127 for this particular Fibonacci extension. Again, these little retracement. Here's this 618. So this little H pattern here, right? So those are the level for Netflix. And today I actually traded Amazon on a day trade. So anyway, nothing better to do. So essentially, you see this little trend line here. Amazon kind of broken that, right? And then came down and sort of come down and try to tag this level yesterday here, but it didn't come down to that level. And if we put in see what we get here on this this Fibonacci retracement here. All right, so it sort of came down to close to this 127, and it kind of bounced. And right now it's still, underneath this trend line here, kind of got some resistance. Although today got a little bit of an inside bar. All right, so maybe just kind of holding on this level here. Okay. So if it break through this level again, then most likely you probably see it come down, to this 285 to 280 level. If it can, get back up to this trend line, then maybe you come back up into this 320 area and try to fill this little gap here. Okay. Because you look at this, you still got this little downtrend going. Yeah. So, okay. Then the Apple, is Apple kind of holding up there surprisingly, although we got a little bit of a pullback today. I guess after hour it came back, came down a couple bucks on the after hour. But I believe, it's still pretty constructive for Apple after that big move. And it's kind of holding up there right now, near this 595, 592, 595 area. And essentially we're looking at the next potential target somewhere around the 620, 618. Right, this area here, essentially, back in 2012 time frame. Okay, so and if we look at the intraday, so on an intraday basis, it's still pretty positive. The prices. Let's not look at the after hour. So it's kind of holding up on this 590 support. So we kind of keep an eye on that. If it comes down to this level and the whole support here, that might be a good place to start looking at possibility of, entering some long there maybe. But we'll see what it's going to look like when it get down there. But at least right now, it seems to be, consolidating, holding at this 590, and it didn't do too much today. It's just kind of fluctuate a couple of dollars up and down. So. But overall, Apple was holding up really constructive, even though, the market went up. It didn't do too much. But I think after this big earning gap move, for a little bit of a pullback, it's constructive. So that's it for now. And hopefully, your trading is going well. And good luck to you